I guess and one other question, specifically on stablecoins. I think one of the things that is important to these today, at least in the nascent markets that they're serving today, is these are fully reserved assets, right? These are fully reserved, and that's really important, right? It's not fractional reserve money. The reserves are not then lent out 10 times as you would say with traditional commercial bank money. If stablecoins grow, if these sort of digital dollars that are full reserve, that have these sort of safety and soundness mechanisms behind them, maybe those eventually become more explicit from a regulatory perspective. But does that actually create a shift in ultimately kind of risk management in the banking sector? Does that ultimately, if more and more transactions are in these digital cash, digital dollar type of things, does that change how people think about even things like Basel III requirements? I know, like in China with DCEP, when a bank converts their electronic money into DCEP, that DCEP, like they can't go fractional lend on it. It's considered like M0, right? It sort of has that state. So is there something there perhaps over the long term that has to be thought about in this?
Yeah, well, so let's unpack that just for a minute, because there's a lot in that question. So let me start with the concept that stable coins are fully reserved and everything. So they should be, and the most credible recent projects have been, but we all know from some slightly less recent experience, if you went back a couple of years, there have been stablecoin projects that weren't actually fully reserved. And so one of the things I think that we in the regulatory community need to do is to provide some clarity about what are the reserve and audit expectations for these kinds of projects. There are plenty of analogies out there that would help us do that. There's the analogy of our experience with prepaid cards, with traveler's checks, with other kinds of money transmission instruments. But the first thing I would say is we do need to say something about that to give users confidence that if they're trading in a stable coin, they're no less likely to lose their money than if they have, a sports authority card or some other kind of instrument, some prepaid debit card that they can use. Right. And I think that's a place where we can create some confidence. I think there's also another basic issue that everybody in this community needs to be thinking about and is thinking about, and that is when you're transacting on a blockchain as opposed to through the bank-built networks of SWIFT and ACH, et cetera, there are issues about customer identification and BSA, AML, Bank Secrecy Act, anti-money laundering issues that have to be resolved and are being debated, in the government as we speak. So you have to take those seriously, but you also have to take seriously the demand side case for direct person-to-person value transfer and balance those concerns to get to a place that has credibility with the public and credibility, that it's not principally being used for illicit purposes, which I don't think it is, but those are things you need to talk about. In the longer term, what I see happening here is, first of all, that having an internet native payment instrument is kind of inevitable. And when I say internet native, the problem with the internet today is there are a lot of cool apps on your phone that you can use to transact value, but because they're not internet native, they're not interoperable with each other. Exactly. So for example, Jeremy, if you have Zelle on your phone and I have Venmo, and that's all we have, we can't send money to each other. It's a weird closed loop. Even if we both have Zelle, we are still depending on the clearing bank clearing that transaction with each other. Versus in a fully open system, kind of like in the way that my Gmail and your Hotmail can communicate with each other.
SMTP or HTTP.
Exactly. Yes. Right. And the way that we know this is what's inevitably coming is look at the major payment systems that have arisen just in the last 10 years. So take Stripe as an example. There's a reason why most internet startups choose to use Stripe as their payments platform as opposed to using a bank as their direct payments vendor. And that is because Stripe is an internet native payment processor. They know what they're about. They're direct. They exist in cyberspace. They're not a software that is engrafted onto those protocols. And if that's the case with payment processing, it seems to be inevitable that internet native money would be the fastest and most ease of use way of transmitting value across those networks.
Certainly concur, on all that. Actually, maybe that's a good segue into talking a little bit about like what are the fundamental innovations here with internet native money? Like we have these, we have cash, right? We have the sort of existing forms of bank electronic money, and to varying degrees, like these closed loop, digital payment applications, like they're closed loop. They're sort of a version of kind of bank electronic money, but on a number of different fronts, right? The power here is really different, right? So in terms of interoperability, you just talked about that, this idea that, any digital wallet can pay any other digital wallet kind of anywhere is a big one. But, speed, efficiency, what are your thoughts on some of the like fundamental utility value improvements that come from this shift towards digital dollar stablecoins?
Well, I mean, there are a lot that you can think of, but I'll just take a couple, which I think are relevant. So, one is if you take the fact, which is a fact many people are not aware of, something like 70% of loan defaults are not caused by inability to pay. They're caused by forgetfulness, or they're caused by somebody's on vacation and they didn't come back until after the due date had passed. One of the features of stablecoins is because they're programmable. So just like with your email, I can send an email to you and I can mark it for future delivery at a stated time and the computer will release it. Imagine a world in which you never had to not only write a check, but even make a payment ever again. All of your debits simply transacted on the internet at a stated time and place and could be drawn on a given day. So imagine if you could just manage down loan defaults, late fees.
Improves financial health by virtue.
It improves financial health for sure. I mean, that's definitely one way of that happening. Another really interesting way that I think about it is, you may have seen we recently chartered a new bank here at the OCC called Varo Bank.
Yeah.
And one of the things that Varo does for their customers, but imagine if this was universal, was they allow customers to receive their paycheck funds 48 hours before the funds hit. Mm-hmm. Well, in a world of programmability, if I could simply ping the system and ascertain that you have a paycheck coming in 2 days, and the blockchain shows me that, it's pre-programmed to release that on that day, then I, as your bank, would be much more comfortable going ahead and giving you access to those funds today. It wouldn't have to just be Varo Bank, but any bank could do that. So the programmability feature, the instantaneous settlement features, all of those things would be, I think, game changers. But to me, what it really comes down to is the idea of internet native payments.
Right.
The internet native processors have literally millions of customers who are merchants and other kinds of businesses doing business on the web. If you had a native payment system for that could transact globally, that could transact instantly, that's always going to be better than the current system, which has time delays, chargeback risks, and other kinds of things. I mean, the liquidity enhancement alone is a huge juice to the economy. Yeah.
So any person, any business kind of settling a transaction with a counterparty in seconds with with very high levels of security, and with sort of third generation blockchains, we're now seeing transaction costs that can really get, approaching zero effectively, in the same way, like we don't think about how much it costs to send an email. We don't think about a cross-border email. We just we have this like free communications platform that everyone just kind of connects to.
Exactly. And I would just comment, Jeremy, that these things, in the public's mind, they need to evolve a little bit for the public to sort of understand what the current state of technology is. There was a time period, if you remember, where with cell phones, nobody wanted to use them because taking an incoming call cost the incoming recipient $1 a minute. That seems ridiculous, right? But in the early days, that's how it worked. And then the pricing model settled down and the technology improved, et cetera.
Yeah.